Good morning, everyone, and welcome to NYSE TV Live. I'm Kristen Scholler here in studio at the New York Stock Exchange. Well, stocks are coming off solid gains and set to rise early Wednesday after President Trump's first full day in office for his second term. Deals, earnings, and economic data remain in focus. And in fact, on the IPO front, the largest U.S. energy debut in more than a decade is set to take place on the New York Stock Exchange this week. It would also be the third ever U.S. IPO to list at a market value of over $100 billion. Well, that company is Venture Global, a natural gas exporter serving NYSE-listed customers like Shell, BP, and Edison. Let's take a look at what's on tap in today's show. As the deal market is anticipated to open up amid lower interest rates and a new regulatory environment, we'll discuss a new NYSE IPO index that tracks the performance of companies tapping the capital markets. Plus, we're going to head to Davos, Switzerland, where the World Economic Forum is underway. The Chief Operating Officer of Sandbox VR will join my colleague, Trinity Chavez, with its latest innovations. And speaking of innovation, the head of innovation, equity, and brand design for Dove Skin Cleansing at Unilever is going to share more about the company's new campaign, and it is pink. As we await the stock market open, there is a new index that tracks the performance of recent listings on the New York Stock Exchange. Intercontinental Exchange, the NYSE's parent company, launched the index on Tuesday. And for more, I'm joined by Preston Peacock, head of ICE Data Indices. Preston, welcome.
Thank you.
It's great to have you here. What does this new indice offer?
It offers investors a way to look at new companies that are just tapping the U.S. capital markets. And one of the inspirations for this came when we launched our Unicorn Index last year. Now, a Unicorn Index is private equity, large private equity, that is just kind of forming capital and getting ready to maybe come and launch on the public equity markets. So at that point, we started to look at what an IPO index might look like. How would we think about that? One of the interesting characteristics came out that the NYSE offers a unique venture place for to bring new companies online, and the way that they have their standards and the way that they bring things together potentially brings all of this together and then launches them into the market. And then so you get this idea of going from private equity to the launch pad and then on into, say, the 500 and the 1,000, on into the established capital markets.
How's the performance of newly listed companies on the NYSE compared, relatively speaking?
It's done really interestingly well, and one of the things that we looked at was, well, if you go back some 15 years, for example, and look at the risk-return profile of these companies, what's interesting is they do provide diversification. There is excess return relative to risk, and it really complements the established equity market indices very, very well. This was something of a surprise to us. When you do your R&D to develop new indices, you never quite know what you're going to find. And that was something that we found unique to the NYSE. If you look at other IPOs brought to other exchanges, you don't have that same profile.
How does this index leverage Intercontinental Exchange's experience of bringing new indices to market?
It's that R&D process I was just mentioning. We've got over 7,000 indices across equity, fixed income, commodity, you name it, and even increasingly in alts. It's what we bring to bear is always that R&D, that iterative process of exploration. Indices serve so many uses. Obviously benchmarks, and we're constantly designing benchmarks for use for our clients and exploring new strategies around index construction. But we're also just trying to explore concepts and from a research perspective to shed light. That's one of the things that indices can do is they can actually give you quantitative data on something that people have been talking about to see what you find. You never know what you're going to find.
Well, I know that this is designed as an equal-weighted index, Preston. So what are the requirements for companies to be included in this index?
It's actually very simple, and we started out with this principle of we just want to capture this segment of the market. So it's 200 million minimum market cap, and 1 million trailing ADV, average daily volume. So just to ensure that there's visibility, and this is also it syncs well with the NYSE listing requirements. So we're getting pretty much everything that would qualify to come to the NYSE, and then tracking that. So one of the things that came up initially was, how do you define IPO? Well, initial listing sounds obvious, but there's a period of time. Indices track companies over time. So how long is a company an IPO? 3 years after all of the iterations and prototypes that we went through seem to be a good period of time over which you can look at a company settling into the markets. They are introducing their company to investors, analysts, getting on that quarterly cycle of revealing their earnings, talking about forecasts, all of these things. And then, so 3 years looked like a good period of time to weather the market cycles and also get companies familiar with the end investors.
How do SPACs factor into this?
SPACs have a very, very different risk-return profile. So we excluded SPACs from this index, and I think that if you look at how a SPAC typically behaves, it's very different from capital formation that we're trying to capture with an IPO index. In other words, this ramp of getting companies into the markets and then onto acceptance in in-client portfolios and say the US 500 index and so on. SPACs take a very different approach to that, and so SPACs and post-SPAC operating companies are excluded.
Why was now the right time to launch this?
Interesting question. I think there has been a lot of interest in IPOs in general, and we always go through market cycles, right? And so there'll be lulls, ebbs and flows, and all of this. And right now there seems to be a lot of interest in what could be coming next. We obviously have a new administration. There are lots of changes going on, lots of talk about what that means. And one of the things that it could mean is a lot of new interest in the capital markets and new listings.
We certainly do see a lot in the pipeline, a lot of momentum still around artificial intelligence. Our leader here at the New York Stock Exchange,
Absolutely.
Lynn Martin, also in Davos, saying that she is optimistic about the IPO road ahead for 2025. So certainly a good time to bring this to the market. And if people want to follow this, track the performance, how do they do that? What is the ticker?
It's NYSE IPO. It could not be easier. It's found actually on all of the platforms. You could even find it on Google or Yahoo. It's everywhere, it's ticking live as we speak, or about to start ticking today.
That's right. Moments away from the opening bell. That's Preston Peacock, head of ICE Data Indices here at the New York Stock Exchange. Preston, thank you. Okay, well, stay with us because up next, we will head to Davos, Switzerland, where the World Economic Forum is underway. The Chief Operating Officer of the Sandbox VR is going to join my colleague, Trinity Chavez, on the other side of this break.
In the oil services space, Alburn sees its international sales flat in 2025 versus 2024.
So Brightwave is an investment research platform that uses artificial intelligence to help asset managers understand more about the markets than is humanly possible.
And what would you say that makes you unique, though, from others who are currently on the market?
A number of things. So we have an incredible engineering team. So for myself, I established and led the language model engineering practice at Databricks. Created the first language model to demonstrate that open source technologies could exhibit the kinds of behaviors we've come to expect from ChatGPT. My co-founder is the former CTO of a federally regulated derivatives exchange and clearinghouse. It is.
Yeah, it's really amazing.
And his first deep learning patent was filed in 2018. We've got engineers from Meta and Instagram, award-winning research engineers, commercial team from UBS and McKinsey and Goldman Sachs. It's a stacked bench,
Yes.
and it has allowed us to execute on very, very difficult technical problems. If you think about the number of factors that are relevant to an investment decision, it exceeds the limits of a person's ability to keep it in mind simultaneously. And we see an opportunity with language models to create a technology that allows a person to connect the dots across millions of documents and see a story that nobody else has noticed in order to identify a mispriced asset.
And you decided to come to Money 2020 this year because you had a major announcement about your Series A funding.
That's right.
Yeah.
We have announced a $15 million Series A, preempted by Decibel Partners, one of our seed stage investors, and including participation from Omers Ventures. We're extremely excited about this. This brings our total funding in the past 17 months to $21 million. We've quadrupled our revenue since our Series Seed announcement in June or July, forget exactly when. And it's happened quickly. We've seen vigorous traction, brisk demand from across financial services.
Good morning and welcome back to NYSE TV Live. I'm Kristen Scholler here in studio at the Stock Exchange. Well, global leaders and innovators have descended upon Davos, Switzerland this week for the annual World Economic Forum. And I want to bring in my colleague Trinity Chavez with more. Trinity, good morning.
Good morning, Kristen. That's right. Virtual worlds are expanding as we speak, and with them, new opportunities in gaming, blockchain, and NFTs. The Sandbox has become a key player in this space with millions of users, massive brand partnerships, and a growing economy built around user-generated content. To dive deep into how all of this works and what's next for the platform, we are joined now by Sebastian Bourget. He is the co-founder and COO of the Sandbox. Good morning, or good afternoon, or evening, Sebastian, right? You're joining us all the way from Davos?
Absolutely. Good afternoon, everyone, right from the World Economic Forum in Davos.
Well, thank you so much for joining us on the show. I do want to talk about a few numbers that you had sent over. The Sandbox has surpassed 6.3 million users with a wallet and added over 1 million this year alone. What do you think attributed to this impressive growth, and to which do you plan on expanding the user base in the coming months?
I think it's very simple. Like, we've just kept doing even better what we were already great at, and even during this crypto winter and the tough 2023-2024 market, like, we kept on onboarding major brands. Now we got over 400. Lately, we added likes of Attack on Titan, a massive anime and manga franchise from Japan. We've been improving the product and delivering for creators new possibilities to build more fun games, fun experiences that onboard users much faster. And through this season 4, that's been like a 10-week-long event, we brought together 100 experiences from 40 major brands in music, gaming, entertainment, culture in general. 60 of the best player-made creation, and drove a lot of engagement through simple gaming mechanics, like people have to progress, complete quests, explore those different experiences, and they earn reward. They earn their first NFT, they earn their first Sand token, and then they can choose to keep engaging or just convert it into fiat if they wish. And the recipe of success has been there, that generated over 580,000 unique players who played an average of 3 hours each, generating close to 2 million of hours of total gameplay. That's been exciting, and that definitely showed Metaverse is far from dead. It's just about bringing the right content, the exciting opportunities together, and packaging them very well.
Now, Sebastian, the 1.1 million blockchain transactions and 350,000 NFTs sold during Alpha Season 4 are significant. But how does this growth of blockchain transactions reflect the evolving relationship between users and digital assets within the Sandbox?
One of the main missions of Sandbox is to empower anyone to become creator, and we chose to build the Sandbox platform using blockchain technology to truly empower those creators to own the creation, to own their asset, and be able to monetize them. So we onboard those millions of new users to discover very often for the first time what blockchain means, what is a wallet, how they can actually earn their first digital asset and reward and utilize them. So first of all, what's important is when a new user discovers the Sandbox and play for the first minute, he needs to earn some tokens, some rewards to first be onboarded and discover what's possible there. And afterwards, if they wish to, they can buy more NFTs to increase their earning and have access to exclusive content and quests, which the season 4 has been really driving a lot of those conversions. 350,000 unique NFT purchase is a great number, specifically in blockchain gaming. And we are proud and happy to onboard more and more users to Web3 to generate blockchain transaction, and through that also to educate about financial literacy and the potential and utility of NFTs in gaming.
Now, as the Sandbox has become a major player in the NFT space, what are some of the most exciting trends right now that you are seeing in NFT sales, and how do you foresee this market developing over the near term?
So NFT can represent any sort of digital asset class. Like we've seen collectibles, digital arts, like we have gaming items, virtual lands, and this is one of the leaders in virtual real estate. Avatars that serve as your identity and also can allow you to progress and build a reputation. I do believe that the future trends of NFT will be essentially revolving around user-generated content, allowing creators to make their own content and sell it and monetize it on marketplaces. Avatars and digital identity, being able to choose how your avatar look like, inspired by some of the most favorite brand and celebrities for fun, is a great way to onboard them into the metaverse. And the more utility those NFT will have, for example, enabling new abilities for your avatars, the ability, for example, to double jump, to fly, to do custom action that no other users have, are pretty cool. They can also introduce custom emotes, animation, ways to express yourself, and so on. And among the latest trends we're seeing in technology, I would say AI is playing a more and more important role, both in democratizing access to content creation, which is very important for user-generated content, and also increasing the feeling of liveliness in those worlds by having virtual agents that populate those worlds, that play as real humans, that collaborate or compete with you and participate to those in-game economy by collecting resources and selling them on marketplaces.
Well, there's going to be a lot to look out for in this space. Thank you again, Sébastien Bourget. He is the co-founder and COO of the Sandbox.
Thank you very much, and see you in the metaverse.
Now up next, we're diving deep into the world of innovation and brand strategy with one of the biggest names in the beauty industry. So stay tuned for that.
So Colleen, you joined Planet Fitness as CEO in June. So tell me about your first 6 months.
It's been a very fast first 6 months. I really leaned into spending time in our clubs and getting to know our franchisees, talking with our club team members and seeing how our members utilize our clubs. I call it feet on the street. It's been really insightful. And we've also worked on our strategic imperatives and kind of codified our roadmap for our growth ambition.
So tell me about your growth strategy and vision for the future of Planet Fitness.
Our 4 strategic imperatives really start with refining our brand promise and then making sure we pull that through in our marketing messaging. We're also leaning into member experience to make sure that we're connecting with our membership and enhancing our relationship with our members and delivering a format both inside and outside the clubs that's most meaningful for them and is going to enable them to accomplish their fitness goals. And then we lean in on format optimization and our equipment mix. And that's making sure that we've got the right mix of equipment for how our members want to utilize our clubs today. And when we get all of that right, and we're thoughtful about unit economics and build cost for our franchisees, it enables us to turn up the afterburners on growth.
Now, how will you redefine your brand strategy and communicate it effectively?
We're growing stronger together, and we're all strong on this planet. We're seeing across generational cohorts a focus on utilization of strength in our members' workout routines and our prospective member workout routines. So as we've done consumer testing and consumer surveys, as well as how we've seen our members utilizing our clubs, we've recognized the opportunity to kind of shift our mix a bit and have a greater complement of strength in our clubs.
Good morning and welcome back to NYSE TV Live. I'm Kristen Scholler here in studio at the Stock Exchange. If you're feeling pink heading into Valentine's Day, this next segment is for you. Dove has teamed up with Crumble to offer a new body care line inspired by the viral flavors of Crumble. The limited edition collection is available exclusively at Walmart.com and Walmart stores across the country. And joining me now with more is Gaurav Raisinhani, Head of Innovation, Equity, and Brand Design at Dove Skin Cleansing. Gaurav, thank you so much for joining. And what is behind this collaboration?
Hi, Kristen. Thanks for having me. It's great to be here. I know Dove and Crumble at first sight can probably feel like an unexpected collaboration, but both brands truly share a common goal. And that is to bring joy to their fan base and their communities with these unique sensorial experiences. So imagine when you open a signature pink box of Crumble or when you're reveling in a beauty routine with Dove, both these brands offer you these small everyday moments of joy to indulge in. And that's what this collaboration is about, creating a body care line that honestly is both fun as well as function. And it raises the question on what beauty can be, less of a job, more of a joy. Kristen, why can't self-care feel like a box of cookies, right? And that's why I think this collaboration is actually quite a natural fit.
I love the design. I love the collaboration, of course, famous for Crumble cookies, as you referenced there, Gaurav. So what all is included in the line?
Right. So the line is an array of sweet bath and body products, right? And they're inspired by fan favorite flavors of Crumble desserts. So we have a body wash, we've got a deodorant, we've got a body scrub, and a liquid hand wash in 3 expertly crafted gourmand scents, right? Each inspired by a Crumble cookie classic. So we've got confetti cake, we've got lemon glaze, we've got strawberry shortcrumb, and each one with, warm notes of sugar cookie, buttery cream frosting, and so much more. It really has been designed to feel like a treat for your skin.
It feels like a treat. I'm sure it smells like a treat as well, Gaurav. So you mentioned those classics, confetti cake, lemon glaze, strawberry, crumb cake. How did you pick these particular flavors?
Right. Honestly, the short answer is we listened, right? Because our big inspiration in how we created these flavors was the insight that everyone hates Mondays except Crumble fans. And that's because Crumble drops its weekly rotating menu every Monday, right? And then changes it the following Monday. And we were very inspired by this because we knew Crumble and Dove fans would want some of their favorite flavors back in some sort of permanent form. So we listened, we did deep research with the community, and we identified these 3 scents as the most popular, right? Craving a comeback. And then this body line care, this body care line is really about that. It gives you the opportunity to cookie every day, all day, just for a limited period of time. And that was the inspiration behind it. Very interestingly, the process that bakers use to create a flavor profile for cookies is not dissimilar to the process we use to create a fragrance profile for our products. So the mix is really authentic and it really, really feels like the real deal.
I'm getting hungry and very excited to hopefully use this body care line down the road, Gaurav. This line, in fact, launching the day after Christmas, December 26th. What has the reception been so far in the marketplace?
So it is true, we launched this on and over Christmas. I think one of the reasons we did that was to tap into the feeling of joy from the holiday season, which is synonymous with the joy in everyday self-care. And the reception, early signs, Kristen, but the reception honestly has been overwhelming. The product seems to be flying off shelves. We've had to increase our production cycles. The demand has been so high and it's been so hard to get your hand on these products that we're also picking up some of our items now reselling at 3 to 4 times the retail price across various online sites. And while I can't share specific numbers, I can confidently say we've beaten a lot of our initial benchmarks, and some of the early data is over 50% higher than what we were forecasting. Most crucially, we have built 2 billion media and social impressions and counting. So
Wow.
It's been great.
Well, speaking of social, I know that Dove and Crumble teamed up with the Turn Up Twins to bring this campaign to life to tap into that social element. How have they helped the campaign?
Oh, it's been amazing. We haven't done anything like this, to be honest, before, right? Fans first, built from the community, super non-traditional. And, the Turn Up Twins are they're the social phenomenons who got famous because of Crumble, and we remixed their iconic Crumble jingle as a part of the campaign. They've been wonderful to work with, but I think more importantly, they've been so critical for us in this campaign to bring being both Crumble fans and Dove lovers. Right, they've brought a voice of authenticity and a representation of the community in all the work that we've done. I'm proud to say a lot of their video content is doing exceptionally well, exciting and engaging fans everywhere. And I think on last count, some of those have hit over 4 million views and still tracking. So it's been wonderful.
It is a very pink and pretty line, I should say, Gaurav. Congrats to you. That's Gaurav Raisin-Hani, he's the head of innovation, equity, and brand design at Dove Skin Cleansing. Thanks again.
Thank you.
All right, well, stay with us because up next we'll have more on today's Opening Bell.
How has this partnership propelled Snowflake's growth and deepened its ties to the broader financial and technology communities?
Oh, you know this. The New York Stock Exchange is the most storied stock exchange ever on the planet, and we're thrilled and honored to be on it. But there's also a very deep collaboration between the firms. It's at the level of us being the data platform for ICE and for the New York Stock Exchange, and being an important distribution mechanism for all of the amazing data that the NYSE wants to share with its customers and partners. We get a lot of great feedback about where Snowflake should evolve from Lynn and her team. And things like the tree lighting and the judging or the icing on the cake that demonstrate how closely the companies work with each other to partner, but just as importantly, create success for all of our giant customers. It's a deep partnership that I'm very, very grateful for. I tell people that AI is already magical because these language models can do things like understand fluid language, like the language you and I are speaking, and make sense of it, extract context from it, and do that effortlessly. We knew that how people are going to consume information was going to be changed forever. Just like, back when the first smartphones came, most people in the world kind of simultaneously realized that there was a before and an after, that everybody was going to have these amazing devices with them. I think we're going to think about AI the same.
Good morning and welcome back to NYSE TV Live, everyone. I'm Kristen Scholler, and the opening bell is just minutes away at this point. My colleague Trinity Chavez has more on today's Bell Ringer. Trinity.
Hey, Kristen. Big changes are happening in the world of TV advertising, and Innovid is leading the charge. And today, the New York Stock Exchange is welcoming Innovid and the whole team here. It's an NYSE-listed company trading under the ticker symbol CTV. They are bringing their global teams together for Evolve, a 2-day sales summit kicking off 2025 in style. That's why they are here ringing the opening bell. And for those who might not know about this company, it's all about helping major marketers streamline how their brands are seen across various platforms and countries, driving innovation in connected TV and beyond. So to celebrate and commemorate this milestone, CEO and co-founder Zvika Netter will ring the opening bell, officially opening up the U.S. equity markets alongside his leadership team. Now, Kristen, this company is headquartered here in New York City. We should be getting images right now of the whole team there on the Bell podium as they get ready to ring the opening bell.
That's exactly right, Trinity. We do see them piling in, awaiting the stock market open on this Wednesday. Stocks looking to gain at the open. A lot of happy faces up there as we prepare for that market open. Just in a few moments, let's take a live look at the opening bell podium. All right, and we are officially open for trade. Packed podium, packed floor here at the New York Stock Exchange, and stocks opening fractionally higher on the back of earnings and, of course, announcements that we have heard from President Trump now in his official third day in office. Well, joining me now with more to talk about the equity market and the path forward is Jimmy Lee. He's the CEO of the Wealth Consulting Group. Jimmy, welcome.
Great to see you.
Yeah, it's great to see you. Great to have you in person here at the Stock Exchange. And what are you watching in equities right now?
Well, I got to tell you, I think that we have a potentially good year ahead of us following two phenomenal years in the equity markets that a lot of economists were not predicting. And so I think you've got two major themes this year with potential deregulation and lower interest rates. I think those two tailwinds are huge. While I think we could see a little bit of profit taking and volatility maybe in the first half of this year, Kristen, I think it's going to allow people to get some of the money back to work if you've been out of the market, which, you know, we follow weekly flows into the equity markets, fixed income and cash. It's amazing how many people have actually missed out on these great returns the last 2 years.
Interesting. So you're right. People have mentioned, market watchers on our show have mentioned volatility, that could be in play here as there is a changing of the guard in DC. And of course, after a very strong 2-year bull market, how should investors be prepared to navigate that?
You know, we like cyclicals actually, believe it or not. We think that, you know, that we're going to continue in this expansion. We think we're in the sort of the middle of the market expansion and not late stage yet. So I think you can buy cyclicals. We like industrials, financials, even materials that have been really underperforming. As rates come down, and that's where really I'm a contrarian, I think that inflation is going to be lower, much lower than what people are predicting today. I think that'll allow the Fed to move more than what the futures market's telling us right now. And so I think that interest rate sensitive sectors can also perform well, such as real estate, maybe even utilities having another follow on year.
Yeah.
So I like those types of sectors that really are kind of out of favor right now.
Should people be timing the market? We've heard a lot of calls about volatility, that perhaps a correction is healthy, right? Many people say a 10% pullback is actually healthy.
It really is, and I don't recommend timing the market. So that's probably the one thing that's constant, you know, with investing is that the human fear and greed continues to play into it. And so investors continually underperform their own investments because they're trying to time the market, which is why we've seen so much money sitting in cash lately. And so, no, I don't think timing the market's a smart thing to do. You may want to rotate out of some of the positions that if you're invested and you've got a lot of concentration in some, you know, some names, maybe in the Mag 7, you should think about diversifying a little bit more.
I'm glad that you brought up the Mag 7 because technology names back in focus, especially after President Trump said yesterday a $500 billion AI infrastructure investment with publicly listed NYSE company Oracle, as well as OpenAI and SoftBank too. Does that provide a moat around some of these technology names to continue rising after leading the 2-year bull market?
Yes, I think with this new administration, it's definitely bullish for the tech sector. I mean, the things that the antitrust and regulation that really, you know, the tech sector is up against, I think we're in a much better environment with this new administration for those companies. But I think that other, you know, companies that do business with some of the hyperscalers will end up maybe performing better, relatively speaking, as far as share price goes, because a lot of those names that we're talking about have gone up so much already.
Is the U.S. the place to be? We've seen international stocks undervalued. Many of our viewers have noted, and of course our guests for a long time now.
I still think the U.S. is the best house in a bad neighborhood, so to speak, meaning that I think the U.S. is still going to do well. Now, I think you can go down down in the market cap spectrum, though, and if rates do come down, small cap stocks, I know a lot of people have been talking about it, I think will finally have their day. I think small cap stocks have a chance of beating large caps this year.
Wow. And of course, small caps had been lagging as well. What does this mean for deal activity? Of course, we could see the Mag 7 perhaps execute some deals via this administration, and hopefully some IPOs returning here to the stock exchange too.
For sure. I think deregulation will help out a lot as far as M&A activity, and so will lower interest rates, especially in the real estate space. So if we get lower rates, and I know a lot of people are saying that rates don't need to come down much, but really where the consumers are still paying for it is inflation in the grocery stores and consumer debt. So if you've gotten a mortgage in the last 2 years, your payments are much higher than before. Credit card payments, auto loan payments, all those things depend on consumer interest rates and the 10-year coming down. And so I think the Fed doesn't need to lower rates, and it'll help deal activity in all parts of the market.
And in terms of what else you're watching, Jimmy, what is on your radar?
Well, last night I went to an interesting dinner regarding geopolitics. And so I think that's still on my radar as a potential big risk with a lot of the U.S. companies. We'll see how it happens, what the tariff war situation might look like between the countries that Trump's been talking about. But I actually think it's going to work out okay. And I think it's going to be more bark than bite. And I think it's art of the deal, which we know President Trump likes to do deals.
We like to hear your optimism here on NYSE TV Live. Jimmy Lee joining me in person. He's the CEO of the Wealth Consulting Group. Jimmy, thank you.
Thank you. Good to see you.
Good to see you. Okay, well, stay with us because up next we'll check back in with Trinity Chavez and some of her latest work on taking stock as well as heading out to Davos, Switzerland.
Innovid is a space logistic company. Actually, we have been the first space logistic company in the world, a pioneer. What does it mean? Space logistics for us means taking care of customer assets in space, so satellites.
But what you're describing, it can't be easy. So talk to me more about how you go about optimizing in-orbit services while also reducing costs for your clients.
You can consider the launch vehicle, the rocket, as a bus, leaving each passenger at the terminus. Our satellite, our orbital transfer vehicle, that's the technical name, is released at the terminus together with other passenger. But our satellite has on board third-party passengers, small satellites on behalf of other companies. And if the rocket is a bus, we are Uber, taking each passenger to their respective home, which is the target orbit. They could do that on their own, which with traditional methods takes 6 to 10 months, thus wasting 1/3 on 1/4 of their operational life. We can do that in much lower time. So the result for the end user is getting to revenues earlier and extending the operational life of their asset.
There has been increasing demand when it comes to the utilization of space-based technologies. Talk to me about how D-Orbit is positioning itself from a business standpoint to keep up with the growing demand.
Besides the traditional standard services, we now see a big demand for something new, which is cloud computing in orbit. The quick, immediate need of
Welcome back to NYSE TV Live. I'm Trinity Chavez at the New York Stock Exchange. Now, empowering women isn't just the right thing to do, but it's also an economic game changer. Joining us from Davos is Smriti Irani. She is the founder of the Alliance for Global Good, Gender Equity and Equality. Her work alongside partners like the Gates Foundation is driving change in industries like energy and agriculture. Good evening, Smriti from Davos.
Namaste from Davos.
Well, thank you so much for joining us on the show today. Let's just jump right into this conversation. Talk to me about what are some of the key themes emerging this year at Davos, specifically when it comes to gender equity and the empowerment of women in the global economy.
I think Davos right now is overwhelmed by two issues, predominantly by AI and the prospects, the disruptions the gains or possibly the new burdens it may create. And I believe that if you look at just the female agency and financially at that, 70% of the jobs that are held by women will fall suspect to automation. While in Davos, there is a huge conversation around AI agents in the year 2025. There are many parts of the world where generative AI is still not being used by women or businesses that have women at the core of their functionalities. Additionally, I think that we in the Alliance for Global Good, Gender Equity and Equality have managed to move the conversation with regards to women from philanthropy to business realities. There is a lot of conversation on the streets of Davos about pledges and agendas. There's a lot of money for rhetoric. We are trying to create more and more financial ecosystems for realities of the world that women work in and women do business with. Today, I'm very happy to announce on your esteemed platform that we will announce 2 major partnerships. One with 56 Commonwealth countries. We are making a case in India in 250 locations across India with 100,000 women-owned businesses, introducing them to financial instruments so that they can make the next level entry into their business atmosphere. Women who understand product designs, helping them engage deeper on business needs within their communities, within their geographies, and those who aspire to be a part of the international global supply chain, teaching them certifications, standardization, teaching women also, apart from their interface with financial institutions and credit systems, as to how they can outlive the life cycle of their product or their business ideas. After we make a case for it in India, we are taking it to 56 Commonwealth countries. We are also announcing a strategic partnership with the US-India Strategic Partnership Forum, and particularly we will work towards having more and more female in leadership roles in the energy sector and in areas of industrial growth.
And with so much economic uncertainty worldwide, how are women uniquely positioned to drive stability and growth in their communities and industries?
I think, Trinity, when we talk about women and the economic impact that they can create, the conversation that is not often heard about is what is the gap that if health innovations are not funded properly from pharmaceutical companies or those who invest in the healthcare sectors, what is the productivity loss when employees are women in the global economy? Today, numbers say that close to $15 trillion worth of productivity loss will be seen by the world by the year 2030 if we constrain ourselves from investments in health innovations, particularly which impact women. I also believe that we in India, for example, and I can speak from my country, have made an evidence case as to how women are great investments for capital markets. We've had 300 million loans given out to women in the SME segment. NPA is less than 1.9%. as compared to male-owned businesses where the NPAs are around 2.3% and above.
Oh, wow.
If you look at the annual global economic growth numbers, women employees have contributed 0.37 percentage points to annual economic global numbers as compared to male employees where the number is as less as possibly 1.14%. So there is already an economic evidence case as to why you should invest more and more in opportunities so that women become a part of not only the labor force, 40% of the global labor force is women. The problem is that you don't see women in leadership roles in companies when the money gets better. So that is what we are hoping to do, to create more and more opportunities for companies to retain female talent, not only because they're women, but because they're great talent to have. Additionally, we are mindful of the fact that for too long, the issue of the agency of women in business has not been in some way represented, not as a diversity issue, but as an economic imperative. And I think our alliance is positioned to change that narrative, that if you want to help women in business, don't do it out of your concerns for diversity,
Yeah.
Do it because it makes a great business sense.
A lot of important points that you make. Thank you so much again for joining us on the show this morning. Smitri Irani, founder of the Global Alliance for Good and Gender Equity and Equality. Thank you for joining us.
Thank you.
Now, we have a lot more to get to, so make sure to stay tuned. We're going to take a quick break and meet you on the other side.
So you work with many organizations undergoing digital transformation. What role does observability play, and where does Dynatrace fit in?
When you're going through a digital transformation, most likely you're going to change a lot of your digital estates. You're building new applications, you're connecting maybe a new mobile app or a new service to your backend systems connected to AI systems. So the first thing you need to do where observability helps you is really understand your entire IT estate. What are you running? Which components or which applications are talking to others? What's working, what's not working? Because you're obviously going through this change, you're going to iterate over this environment and keep evolving it. That's one role that observability is playing. And once those services are then live and users are using it, observability helps you to optimize the user experience. I think just 2 days ago, when it was the British Airways outage, how do you feel at an airport if the service is not great? So observability does both. It actually helps you to understand how your system is working and how the individual pieces play together. And it also helps you to understand how users feel about your service, whether it's working for them. And then finally, if something goes wrong, and every now and then obviously something does actually go wrong, it helps you to find the issue quite quickly and helps you to also to resolve the root cause, or what the actual problem might be. Because as you can imagine in complex landscapes, there's thousands, even millions of components. And observability and Dynatrace also helps you to pinpoint exactly where the problem is.
Now, Dynatrace has been working with AI for more than a decade. As the discussion regarding the cost of generative AI investments and ROI heats up, tell me, how is Dynatrace helping organizations to get the most value out of AI?
So we have a dedicated solution that we call AI observability. So we just talked about observability. Now we're extending it just to the realm of AI, so helping understand how much.
Now, with the rapid rise of connected TV and streaming platforms, the advertising landscape is undergoing a major transformation. At the forefront of this shift is Innovid, a company that's redefining how brands connect and audiences in the digital age. Joining us now is Zvika Netter. He is the CEO of Innovid to share insights on the latest trends in CTV advertising, how data and AI are shaping the industry. It's a pleasure to have you on the show today, Zvika.
Pleasure to be here, Trinity. Thank you so much.
Absolutely. So let's just talk about what's driving Innovid's mission success.
So our vision is to keep we're focusing on television, is to keep TV open for everyone, and that's through the support and usage of advertising. And the second phrase is controlled by no one, to make sure that TV stays open and available for everybody without like a single power taking over television as much as certain powers took over the internet.
Yeah. Well, walk me through this a little bit more.
Yeah.
How do you see its role evolving when it comes specifically to digital advertising?
Absolutely. So what's happening now, the TV budget is about $200 billion a year spent by the largest brands. All that massive amount of money is shifting, is going through a digital channel that's connected television, where we're all connecting our TVs to the internet. Those TV ads are now streamed online, which basically means that there's a two-way communication. Instead of just broadcast and spray and pray to everybody, you're basically you're allowing a one-on-one conversation with the audience. So you can send specific TV ads to specific household and also allow interactivity. So the same way you interact with Netflix or Roku, you'll be able to interact with ads and get more information, shop for things, decide to engage or not engage with certain type of content. So it allows a two-way communication from the largest screen in the house, and that's the TV screen.
And wouldn't it be a conversation if I didn't bring up AI, obviously? This is a topic of conversation around the world. So talk to me about how you're implementing AI, utilizing the technology to improve CTV and the overall user experience and effectiveness.
Absolutely. So What drives AI is data. So once TV moves from linear broadcast into digital, there's a lot of information that's being generated, like about different households, etc. So what this technology allows, and AI specifically, in order to produce TV quality ads at scale, you need, and that can be personalized, right? You know, until now it was one ad for a Super Bowl. Now imagine you can create 100,000 versions of the campaign to different households. So AI can absolutely allow you create certain framework, and AI creates all the permutations of that ad, helps make decision, and kind of speed up the overall workflow.
Speaking of the Super Bowl,
Yes.
it's coming up. You know, we're in January.
Yes.
It's a few weeks away. Are
Yep.
you planning anything?
Absolutely.
So talk to me about what you're
Yes.
planning and how you're going to be strategic in your execution when it comes to the advertising plan.
Absolutely, you know, and Super Bowl is a mega advertising event. It's always been. I can tell you, you know, not what's coming, but because that's secret. But what we did last time.
We share secrets here on the show, though. Yeah, we're friends.
It's just between us. Yes. But last year we worked with Paramount Plus. It was the first time there were interactive TV ads. So if you watch it on a digital media on your TV through an IP connection, and there were certain ads for Paramount content, you could click a button, it says save to watch later. So it's little things like that that you can now, it's like, oh, this is interesting, but you don't want to interrupt the live broadcast. You click a button, it puts it on the side, and you get back to it later. So imagine like a shopping cart for content. So there's all these cool ideas that you can talk back to your TV and engage back with the TV.
Amazing.
So stuff like that.
But talk to me about some other trends that you're noticing right now in the broader landscape that could really impact the future of CTV advertising.
Absolutely. What we're seeing is so initially in the early days, and we've been around 15 years, so initially it was like, okay, I'm going to do the same thing I'm doing on television, on broadcast television, on connected television. It's just technology. What brands are understanding now, and marketers, that they can actually use the medium to go down the funnel. So instead of just branding tool, they can actually have a call to action. Imagine even a QR code. You see QR codes on your screen, you can send something. So you already, can send somebody a coupon, then they go and purchase something and you close the loop. So call it like collapse of the funnel, like this entire funnel that had these tiers, you can now do much more. And also connected to social advertising, out-of-home advertising. It's connecting television to the entire ecosystem, and that's what we do.
It's so fascinating what you do. I could talk to you about this all day. Thank you. Thank you so much for joining us on the show again.
It's been a pleasure.
Zvika Netter, CEO of Innovid.
Thank you.
Now, I do want to send things back over to my colleague Kristen Scholler to talk more about a major event that's also kicking off in New York City. Kristen?
Trinity, that's exactly right, and weather isn't stopping this one.
It was a pleasure. You did great.
The Discover Boating New York Boat Show kicks off today at the Javits Center in Manhattan, and it is in partnership with Progressive Insurance. Well, our Judy Shaw is on the ground live from the event with more. Judy, good morning.
Kristen, good morning. It may be cold outside, but it's warm in here at the New York Boat Show. And joining me today is Frank Hugelmeyer. He is the president and CEO of the National Marine Manufacturers Association. Frank, it's always wonderful to see you, and this time it's wonderful to be here at the New York Boat Show.
Yeah, thanks for joining us, Judy. It's so nice to host you. We're excited to have you here at the show.
So, Frank, tell me about the boat show and what we can expect to see.
So this is the oldest boat show in all of North America. It started in 1905, so this is the 118th edition of this storied boat show. And this is the one place each year in the New York region that you can see all of the different types of boats and all of the different vendors in the entire New York metro area under one roof. You can't see it anywhere else.
So now, Frank, during COVID, we know that the boating industry hit its peak. What have you seen post-COVID?
So we've seen some headwinds, right? We saw record sales during COVID, and but we've seen inflationary pressures. We've also seen fluctuating interest rates. That's created fluctuating consumer confidence. And so that definitely has created some slowdown. You'll see a slowdown this past year in 2024, around 9 to 12% based on the different product categories. But we're starting to see the early signs of growth for 2025. Obviously, the presidential campaign created some contentiousness and folks were nervous. But we're now seeing renewed excitement because we expect the tax cuts to be extended. That was fuel for the manufacturing sector and the boating industry in 2017 and thereafter, and we expect the same thing in 2025.
Frank, are there any trends or innovations that we're seeing that are driving high interest in recreational boating?
Yeah, absolutely. Well, first off, you have recreational industry is a massive, massive industry. We're a $1.2 trillion industry. You've got over 2.2% of the U.S. GDP comes out of recreation. The largest driver of the recreation economy is recreational boating and fishing, and we 230 billion. The reason for that is not only the innovation that comes out of the industry, but it's the connection of people to the water and the lifestyle and the activities that you can only find on the water. And you're seeing more and more new technologies come into the space that open it up for a wider variety of different consumers, and that's something that you'll see here at the show.
And why are shows like this so important for the boating industry?
Well, 60% of all industry sales come out of the early season boat shows. The reason for the timing, right, it's cold right now. It's 0 degrees outside or 10. It's sunny and warm in the Javits Center right now. Beach Club is open. And the reason is if you come to the show and you buy your boat now, you're able to get it delivered at the beginning of the boat show season and be able to have time on the water all throughout 2025. So this is the time to be buying shows. And we've seen great success in the early shows this year. We just held 3 last week around the country. We have another 3 this week around the country. We're seeing great early signs of sales, and we're also seeing increased attendance at all the shows.
Well, as you mentioned, cold outside but warm in here. So tell me when we can actually see all of this. How long is it running? How can the public come and see the show?
Yeah, so we're open today all the way through. We open at noon today, and we're here all the way till Sunday. And as I said, it is sunny here. This is really, if you want to get away from the cold, come on down to the Javits Center, because this is where the community is coming together. There's such a wonderful, wonderful connection in this show. Whenever you go on a boat and you're out on the water and you see a stranger, you wave. And so this is a special, special place to connect with other people. Bring your family, bring your kids. There's a whole beach club over that I'm looking at right down there where you can hang out with our mixologists. There's celebrity chefs throughout the period. I think they're making oysters right now, so you and I can run over there in a moment and go taste that.
All right. Well, Frank, it's been wonderful to talk with you. Thank you so much for allowing us to be here and sharing in this excitement with the boat show.
Well, thank you, Judy, for always showing off the New York Boat Show, one of the iconic shows in the entire country.
All right, Kristen, back to you in the studio.
Judy Shaw live for us at the boat show in Midtown Manhattan at the Javits Center. Judy, thank you so much. Looking forward to some warmer weather to perhaps get out on one of those boats. And I do want to bring back my colleague, Trinity Chavez. Trinity, we've had so much to cover, from bell ringers to the markets, and of course, what's transpiring in Davos, Switzerland.
I know we've been covering a lot of ground during the show, Kristen, but I have to say, after seeing Judy there on the ground with all of those recreational boats, I didn't know it was a $1.2 trillion industry. I know that, maybe I'll start making those spring break plans.
Spring break plans, summer plans, indeed, always nice to get out on the water here in the New York Harbor. And of course, we'll continue to cover everything that's happening here at the Stock Exchange in the days to come. You can join us 9 a.m. Eastern Time tomorrow. From Trinity, myself, and everyone, thanks for watching.
being innovators in the market. Thank you for all you do every day to show the world what best in class truly means.
We are incredibly proud to join the ranks of other highly successful companies who partnered with this legendary institution.
What a time to be here. I am so proud of what we're doing. This is a huge milestone for our business. There's a lot of people responsible for getting to where we are today.
We have a role to play in bridging the gaps that exist today between us.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. I'm so optimistic about what lies ahead. It has been a privilege to be with you.